I feel like I'm a little crooked here. There we go. That should be all right. Hey, good morning, everybody. What's going on? It is a beautiful yet gloomy morning. 65 degrees. Feels great this morning. A little humid, though. Hey, so today I wanted to talk a little bit about the difference between the market value, appraised value, and the assessed value, because there's a lot of misconceptions regarding, frankly, all three of them, right? So I'm going to start with what I think is the most important value, which is the market value. The market value is basically what a ready, willing, and able and informed buyer is going to purchase a property for, right? You might hire on a listing agent to list your property. They're going to do maybe a comparative market analysis or maybe a price trend analysis, and they're going to come up with a value for your property. They're going to compare your house to similar properties in maybe the neighborhood or on the same street, or, you know, whatever the local demographic is. Now, that value, it means it's a great starting point, but it doesn't necessarily mean anything with regard to the market value. So you come up with your listing price based on the CMAs or maybe the PTA, and let's call it $300,000. And now a buyer comes in and they offer you $280,000, right? There's a gap of $20,000. Now you have another buyer that comes in and offers $295,000. Right, so now you have a gap of $5,000, but no one touches that $300,000 mark, right? So now the market value on your property is going to be that $295,000 that eventually ended up getting it sold, right? Which might be right on par with the local neighborhood. It might be a little bit higher, might be a little bit lower than the neighborhood, right? Either way, that is going to be your market value for your property that someone just purchased, right? That's the market value. Now, when a buyer comes in and they're financing the property, now you have what's called appraised value. And the bank, they want to make sure that they have a wise investment, right? So they're going to send in a third-party appraiser who is just independent and unbiased. They're going to come in, they're going to appraise everything in the property. Let's say that the property is being purchased at $300,000, and you might have the appraised value for $350,000. There may be no shot in hell that you get $350,000 for that house, but that's what the bank comes in and says that your property is worth with everything inside of it. But that's not necessarily what what a ready, willing, and able buyer is going to purchase your home for. They might not see $350,000 value there, right? They might not see it worth that much. Now, in this market, where it's a hot seller's market, we see the appraised value at $300,000, but houses are selling maybe at $320,000. What happens in this case? So there's a couple different things that you can do. You can get creative, but the bank will only finance the appraised value, so $300,000. They're only going to finance that much. So the buyer can come up to $320,000 with cash. They can come up with $20,000 in cash, or they can come up with $10,000 in cash, and the seller can meet them in the middle at $310,000, right? So there's a number of ways you can work that out and negotiate that. But at the end of the day, the bank's only going to finance that $300,000. So you're going to have to figure it out if you want the house that bad. So in markets like Brighton, you're seeing that all the time, where sellers are listing the property at $300,000 and they might get $350,000 for it, just because it's a hot market. Now, moving on to the most controversial value, which is the assessed value. And this is the biggest misconception I see with first-time home buyers, is they go into Zillow and they see the assessed amount, which might be $280,000. But the listing price, the asking price, is $300,000, right? Now they're saying that there's a $20,000 gap, and they're not willing to pay $20,000 over the assessment value. Well, guys, look, the assessment value has nothing to do with the market value. Like I said before, the market value is basically what a ready, willing, and able buyer is going to throw at the house as far as cash goes. Now, the assessed value is only what the local government is coming. They're going to look at the outside of your house and they're going to say, hey, that house looks like it's in average condition, nice roof, nice siding. It looks like it might have granite countertops, hardwood floors. I can't really tell, so I'm going to assess it at $280,000. Now, at that $280,000, the local government comes in and they have their tax rate, maybe 80%, maybe 90%, whatever it is. They multiply that by the assessed value of $280,000, and they get your tax rate or your tax number, and that's what they tax you on, right? So you might sell your house for $350,000 when the assessed value is only $280,000. Okay, the assessed value has nothing to do with what your home is actually worth, because let's remember, when's the last time that an assessor has actually stepped foot inside your house and said, okay, these are, mahogany doors that are 3 inches thick, with these are, hardwood floors, this is a quartz countertop, and great cabinets. When's the last time they've stepped foot inside your house and noticed all of those things that you spent a lot of money on, right? That increase the value of your property, the market value of your property, okay? And possibly even the appraised value. So with all that being said, guys, don't pay so much attention to the assessed value. Only pay attention to the assessed value when you're talking about taxes, because that's what you will be taxed on, is the assessed value. And eventually, when you purchase the house, it will get reassessed in the future. And you can always ask for a reassessment, things like that. There's ways of lowering it, but eventually it will increase or decrease if the property value decreases as well. So with that said, guys, I hope you learned something by this. Hey, if you need anything whatsoever regarding real estate, or you just want to talk and say what's up or anything, feel free to contact me. Reach out by phone, text, email. My phone number is 585-490-1902. My email is averyhamilton@kw.com. That's averyhamilton@kw.com. All right, guys, we'll catch you on the next one. Until then, be great.